Yes, yes. Good evening to you all. Yes, good evening. So we can start our class now. We are looking at the trial balance and balancing of accounts. We are looking at the trial balance and balancing of accounts. That's our topic for today. It's what we are going to be looking at. I welcome you all in this session. Let us go through our class material and we'll see what a trial balance is and then all what we are going to be looking at. Now, at suitable intervals, the entries in each ledger account are totaled and a balance is always struck. Balances are usually collected in what we call a trial balance, which is then used as a basis for preparing a statement of profit or loss and the statement of financial position. Remember, we talked about the accounting cycle, and we said that business transactions have to be documented. Then, from documentation of these business transactions, we have to enter them in what we call the books of prime entry. Then from the books of prime entry, we have to post the transactions to the respective ledgers. Then those ledgers will be balanced, and then a trial balance will be prepared. So we are going to see how do we post these transactions to the respective ledgers, and then how do we balance off the accounts, and how do we come up with a trial balance. Now, assuming you have a list of transactions and you've been asked to post them to the relevant ledger accounts, you do that very quickly as possible. But of course, you find that you have little time that is left over at the end of the day. How would you check that you have posted all the debit and the credit entries properly? Remember, when we are recording these transactions in the ledger accounts, we have to follow what we call the duality concept. That for every debit, there has to be a corresponding credit entry. Now, after posting this transaction to the respective ledger accounts, how do you check that all what you have posted is correct? How do you ensure that all the debits and the credits are properly recorded? Of course, there is no proof. There is no proof method which you can use to check that accuracy, that all the debits have their corresponding credits. One thing you have to know, or one thing which you have to do, is that there is a technique which shows up the most obvious mistakes, and that technique is to prepare what we call a trial balance. When we talk about a trial balance, that is defined as a list of ledger balances shown in debit and credit columns. So I'll post the transactions quickly in the different ledger accounts, but these accounts are going to be balanced off. And then after balancing off these accounts, I will copy the balances of each and every ledger account. I show those balances in the trial balance, in the columns debit and credit. And the total debits in the trial balance should always equal to the total credits in that trial balance. Don't forget that in double entry bookkeeping, for each debit entry, there is always a corresponding credit entry. There is always a corresponding credit entry, and for each credit entry, there is always a debit entry. So all those items that are recorded in the accounts on the debit side should equal in total to all those items that are recorded on the credit side of the accounts. Then thereafter, of course, after posting the different transactions in the ledger accounts, those ledger accounts have to be balanced. So we shall see how to balance the accounts, the ledger accounts. I'm going to show you that. So we have a revision question which I'm going to use to see how we can come up with the accounts, how we can post them, how we can post the different transactions to ledger accounts, and then how can we balance off those accounts one by one. Okay. So we have a question here, which I've shared in our WhatsApp group. We have a question. I don't know who is going to read for us. Allen Kauma, can you read for us the question on your screen? Allen Kauma, question is clear on the screen. You can read for us, and then we'll see what we are going to do. Madam Allen.
Yes, good evening, everyone. Thank you for the opportunity. And the question goes, Kabate started business on 1st September 2011 as a sole proprietor. He had the following balances on 1st September 2012. Motor van, 9,000. Fixtures and fittings, 12,000. Inventory, 25,780. Am I reading correctly?
Yes.
Bakuru, 12,000. Regina, 4,000. Trade receivables. They have Luckey, 800. Maido, 3,600. Dodo, 300. And cash at hand as 25,080 shillings. Cash in the till box, 900.
Okay.
So what is required of us is to construct Kabate's opening statement of affairs as at 1st September 2012.
Okay, let's first see how we can deal with part A. Now, you're required to construct Kabate's opening statement of affairs. You're required to construct Kabate's opening statement of affairs. Now, when you try to look at the information this Kabate started business September 2011 as a sole proprietor. He had the following balances on 1st September 2012. So after a period of 1 year, This is what we have. He has the motor van, he has fixtures and so on, the inventory, the receivables, cash at bank, and then cash in the till box. But now, when you try to look at the information which we have, the balances from the previous period, you will see that Kabate, we don't have the opening capital. We don't know what is Kabate's capital as at 1st September 2012. We don't have that capital. So here down, they're asking you that construct Kabate's opening statement of affairs as at 1st September 2012. Now, what is an opening statement of affairs? Now, an opening statement of affairs is prepared to arrive at what we call the opening capital. To arrive at what we call the opening capital. When you look at the balances of Kabate as at 1st September 2012, for sure, you cannot find out the opening capital. So part A, you've been asked to construct Kabate's opening statement of affairs as at 1st September 2012. Now, whenever they ask you to prepare an opening statement of affairs, you are required to determine the opening capital as at 1st September 2012 in this case. So opening statement of affairs is prepared to arrive at what we call the opening capital of the business as at the start. So due to the fact that some of you don't have the question, I've shared the question in the group, but now what you're going to do, take a screenshot of the question, then we'll see how we can come up with the opening statement of affairs. Take a screenshot, then we'll see how we can arrive at the opening statement of affairs, how we can prepare the opening statement of affairs. I told you the statement of affairs is always prepared to arrive at what we call the opening capital. Arrive at the opening capital. You've been given balances for assets as well as balances for liabilities, meaning that from the accounting equation, if you want to get my capital will equal to assets minus the liabilities. Capital will equal to assets minus liabilities. So I'm going to list the assets of Kabate, and then we deduct the liabilities of Kabate to arrive at the opening capital. So take a screenshot, then we are going to see how we can come up with the opening statement of affairs for Kabate's business. And that statement I've told you is always prepared to arrive at the opening capital of the business. So part A, as you can see on your screen, you see I have Kabate's statement of affairs as at 1st September 2012. So we are going to list the assets of Kabate, and then we list the liabilities, because capital will always equal to the assets of the business minus its liabilities. So look through the information, the balances. We need to identify what the assets are, their balances, and then the liabilities. We get the assets minus the liabilities to arrive at the opening capital. Under the assets, you have motor van. So how much is the motor van balance?
9,000.
9,000. Okay, that is 90 million. The 3 zeros are up there. The level of rounding off is 1,000. So motor van, that is 9,000. That is an asset to the business. Then fixtures and fittings, how much?
12.
Fixtures and fittings, that is 12,000.
12 million.
12 million, okay. Then what else? Inventory.
Inventory 25,780.
27,000, 27, 25.
25,700.
That's 25.
25,780. 25,780. That is our inventory. Okay. Then what else do we have? Trade receivables. Who are trade
Trade.
receivables? Before we go to it, who are trade receivables? Who are the trade receivables? Who can explain what trade receivable means?
I think these are people who are supposed to pay Kabate.
People who are supposed to pay Kabate. Okay, thank you, Alan. Then any other trial? Any other contribution? Who are trade receivables?
Those are payments made to Kabate.
Payments made to Kabate. Payments made to Kabate. Not really. Not really. Not payments. Trade receivables members. Who are trade receivables? Now, when we talk about trade receivables, in this case, trade receivables are the amounts owed to a business by its customers for the goods or services that were sold on credit. Okay, so trade receivables are the amounts owed to a business by its customers for the goods or services sold to these customers on credit. So in this case, the customers are Lakeri, Maido, and Dodo. So these are assets on the balance sheet or on this statement of affairs of the business, because the business is operating on a credit basis. So these amounts owed to the business by Lakeri, Maido, and Dodo, they are assets. So we also have to present them under the assets of the business. So how much is Lakeri's balance? Sorry, yes, Lakeri's balance is how much? Lakeri?
800 million.
This is 800. Then Maido?
And
Maido is how much? Maido?
Maido
Maido
is
is
300,000.
3,600. Then cash at bank. Sorry, there is also Dodo. Dodo is how much?
300.
This is 300. Then cash at bank.
25,000.
25,080. Okay. Then cash in the toolbox.
900.
That is 900. So total assets. How can we arrive at total assets? Someone add, we'll get the total assets figure. Total assets, what will be the total assets figure now? Total assets. May I have 77,460? Have 77,460. Please confirm whether it's what you have that side. Is that the total assets figure?
77,460.
77,460. That is the total assets figure. That's the total assets figure. That's the total assets figure. Then we move to the trade payables. We have placed the liabilities, and under the liabilities, according to the information we only have the trade payables. But of course, we need to know who are the trade payables. Who
Suppliers.
are the trade payables?
These are the suppliers who are demanding the business money.
Suppliers who are demanding the business money. Good. Any other contribution? Who are the trade payables?
Those are
Trade
the money.
payables.
Those are the money a business owns for a goods and services.
The money that the business does what?
Is the money a business owns for a good and services.
Okay, trade payables are the amounts a business owes to its vendors or suppliers for the goods or services that are being purchased on credit. Those are the trade
Yes.
payables. Okay. Those amounts a company owes to its vendors or suppliers for the goods or services purchased on credit. So the trade payables, in this case, we have Bakuru and Regina. How much is Bakuru's balance? How much is Bakuru's balance?
It is 1,200.
Bakuru is 1,200. Then Regina,
Bakuru is 1,200.
yes, we have that. Then Regina,
4,000.
Regina is 4,000. So now what we do, we get our total assets minus the liabilities, arrive at what we call the capital as at 1st September 2012. So how much will the capital be? Total assets minus the liabilities. That will give us the capital of this business.
Seven,
Capital,
seven,
we have
260.
We have 72,260. That is 72,260,000. That is Kabate's capital as at 1st September 2012. So whenever you ask to come up with a statement of affairs, you list the assets of the business, then you list its liabilities, then you get the opening capital. So statement of affairs, opening, that is always prepared to arrive at the opening capital of the business. Okay. Arrive at the opening capital of the business. So that is the statement of affairs as at 1st September 2012. By preparing that, we have arrived at the opening capital of Kabate. That capital is not given, so that's how you can arrive at that capital in this case. Any question before you go to part B of the question? Any question? Anyone with a question before we move into the next part? If you have a question, please, you can ask if you have a question. Any question so far? Okay, if there is no question, then I think we can move into the next part. That is part B. That was part A of the question. We are required to construct a statement of affairs, and we have seen how to do that. Yes, Alan, you can continue. Okay, part B. What do we have in part B of the question?
Part B, the following transactions transpired during the month of September 2012. September 1st, paid rent by check, shillings 1.3. September 2nd, bought goods on credit from Bakuru, shillings 1,520,000, and Regina, shillings 2,140,000. On 3rd September, sold goods on credit to Lakeri, shillings 4,640,000, and Maido 4,120,000. On September 14th, paid motor expenses in cash, shillings 260,000. On September 15th, cash drawings, shillings 340,000. On September 26th, goods returned by Lakeri, shillings 320,000. And Maido, shillings 360,000. 27th September, settled the accounts of Bakuru and Regina by check, less 5% cash discount. September 28th, paid salaries by check, shillings 1,120,000. 29th September, Lakeri settled her account in full by check. On 29th, still, the debt from Dodo proved irrecoverable and was written off. On 30th, bought another motor van, paying by check, shillings 10 million. Required, number 1, post the above transactions in the respective ledger accounts.
Okay. Post the above transactions in the respective ledger accounts. Post the above transactions in the respective ledger accounts. Now, these are the transactions which we have. These are the transactions that transpired in the month of September 2012. And now we have been required to post the above transactions in the respective ledger accounts. But remember, this business has been in operation. It was started on 1st September 2011. And of course, we have been given balances for all these items: motor van, fixtures, inventory, trade payables, that is Bakuru Regina, receivables, that is Remind, cash at bank, and then cash in the toolbox. So, meaning that before we even look at the transactions that transpired during the month of September 2012, these accounts already exist. They're already there because we see they have balances for all these accounts. So what do we have to do first when it comes to part B of the question, Roman 1? Post the above transaction, the respective ledger accounts. What you have to do first is to come up with T accounts. For the motor van, fixtures and fittings, inventory. Under the trade payables, you come up with the Bakuru's account, Regina. You come up with the Lakeri, Maido, Dodo, cash at bank, and then cash in the toolbox. These are the accounts which you have to prepare first. So I expect you to be having a ruler on your table and a pen and a book. You're going to prepare these accounts one by one. Then we see what we are going to enter in those accounts. We look at the transactions that transpired during the month. We enter all those transactions one by one. Then we shall balance and then see how we can come up with a trial balance. So come up with the motor vans account, fixtures and fittings account, inventory, trade payables, Bakuru, Regina, and so on. So those are the accounts which we are going to prepare one by one. So get your book, you'll be having a ruler, and then we'll see how we are going to come up with those accounts one by one. So So according to what we are going to come up with, you're going to prepare all the accounts one by one. But I think it's better before let's come up with let's look at the information in part B. We shall prepare the accounts based on the transaction which we have to save the little time we have. Let's move to part B. Kathy, you can read the first transaction.
On September 1st or 1st September, paid rent by check, shillings, 1,300,000.
Paid rent by check, shillings 1,300,000. Remember, when we are recording these transactions, we should follow the double entry rule. That as we debit, there should be a corresponding credit. So if they paid rent by check, shillings 1.3 M, what do you think are the double entries for this? What are we going to debit? And then what are we going to credit?
We are going to credit the bank account.
We are going to credit the bank account and then
we debit
we
the
debit-
rent
we debit
account.
rent. We debit the rent account.
rent is an expense. So a debit entry will be made in the expense account, that is rent. But then for bank is an asset, and we are paying rent by check. So our money on the bank account is reducing. So what we have to do, we have to make a credit entry in the bank account. So what you're going to do, you prepare your rent account. You prepare your rent account. This is my rent account. I have it here. This is my rent account. So you should also prepare your account that side. This is my rent account. As you can see, it's a T account. In the account, you have to show the date, please. You have to show the date. You have to show the details of the transactions. Then you also have to show the amount. There has to be a column for amounts, as you can see on the screen. There has to be a column for the date, a column for amounts, details, and details. So this is date, details, and then amounts. Remember, the amounts are in shillings thousands, according our information. The level of rounding off is shillings thousands. So I'll also maintain that. That is our rent account. That is our rent account. That is the rent account. This is our rent account. So now we have to post the transaction. We have to post the transaction. That transaction was on 1st September 2012. So I write bank. How much is the rent? How much rent was paid? How much rent was paid, members? How much is the rent payment? How much is the rent payment?
It's 1,300,000.
1,300,000. So we debit. We debit the rent account. But of course, we have to make a credit entry in the bank account. Don't forget, we have to make a credit into the bank account. Open up your bank account. Open up your bank account very fast. Open up the bank account. Open up the bank account. Open up the bank account. Now, before you post anything in the bank account, don't forget that this business has been in operation. So they have some money on the bank account. They have some money on their bank account. How much they have on their bank account? How much is the bank balance? How much is the bank balance? How much is the bank balance? Check your statement of affairs which you have prepared. There is a bank balance, cash at bank. How much is the cash at bank?
25.
Cash at bank is how much, members? Because you cannot pay rent without money. Of course, they paid rent by check, meaning that they had some money on their bank account. So how much is the bank balance?
25.
So that is a debit balance. First enter that balance. Balance brought forward. Balance brought forward. How much is that balance? 25. 080. Okay. Now out of that bank balance, they are paying rent on 1st. So 1st September 2012. 1st September 2012. Details rent. How much is rent paid? That is 1,300. So now you can see that I've debited my rent account. I've debited my rent account, and then I've also credited the bank account. So for each and every debit, there is always a corresponding credit entry. There should be a corresponding credit entry for every debit, as you've seen. There has to be corresponding credit. So that is bank and the rent account. Those are the two accounts which we have so far. We need now to go back and see the following transactions. What is the next transaction after the payment of rent? So, Alan, what's the next transaction? Read for us the second transaction, that is on second.
On second, bought goods on credit from Bakuru at 1,520,000, and Regina, and from Regina at 2,140,000.
Bought goods on credit from Bakuru and then Regina. Now these are purchases. They are purchasing goods from these suppliers, but of course these are credit purchases. These are credit purchases. So which accounts are we supposed to come up with in this case?
The suppliers account.
Which suppliers exactly?
The trade payables accounts. Regina and Bakuru. Then we also open up the purchases account.
So we are coming up with a purchases account. Purchases account because Kabate is buying goods on credit, but then these goods were bought on credit, so we need to come up with a suppliers accounts, that is Bakuru and Regina. These are trade payables to Kabate, so we have to come up with their accounts. So members, prepare the purchases account. Whenever you buy goods for resale, you prepare the purchases account, but then these goods are bought from the suppliers on credit, so I need to come up with the Bakuru's account. Regina's account, and then the purchases account. Let's prepare those accounts quickly. Let's prepare the accounts quickly. Let's prepare the accounts quickly. Let's prepare the accounts quickly. So this is Vapuru's account, purchases account, and then Regina's account. I have these accounts here, as you can see on your screen. Date, the details, and then the amounts. I have to show that in the account, but remember the amounts in thousands. Don't forget. The amounts are in thousands. We are on Vapuru's account. It's what I'm trying to come up with here. Vapuru's account. That is Vapuru's account. This is Vapuru's account. Then Regina's account, it's also here. Also prepare Regina's account. That is Regina's account. In the account, please, you have to clearly state the date. So you need a column for the date. Date, the details, and then the amounts. Your amounts are in shillings and thousands. Amounts. The amounts are in shillings, thousands. Come up with those three accounts. Hope you're preparing them. Dates, details, and then the amounts. These are all in shillings and thousands. Okay, then the purchases account. This is my purchases account. Also here, the purchases, purchases account, purchases accounts, okay. Now, before you enter those transactions, which you have that transaction on second, one thing you're going to do first, remember the business has been in operation, and these suppliers on their accounts, there are some balances. So what you have to do first is to enter the balances of these suppliers. These are liabilities to the business. They are trade payables, and liabilities have a normal credit balance brought down. 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 Normal credit balance brought down. So let us first enter the liabilities for Regina and Vapuru. We should debit them, we should credit them, because these are liabilities to the business. So I'll first enter those opening balances. How much is the balance of Vapuru? Vapuru's balance is how much? Vapuru's balance is how much?
1,200.
Vapuru's balance is 1,200. We credit these are liabilities to the business. Liabilities have a normal credit balance. Balance brought forward. Vapuru is how much? You said it's how much?
1,200.
That is 1,200, 1,200. So we enter that. We enter that balance. Then also do the same. Regina's account. Go and enter that balance on the credit, the opening balance. There is some opening balance already on the account. How much is that balance for Regina?
4,000.
That is 4,000. So you've entered the balances. Now they are telling you that on second, what happened? On second, what happened?
On second, bought goods on credit from Bakuru worth 1,520,000 and Regina 2,140,000.
So which entries do we make in that case? Which entries do we make? Which accounts are we going to debit and then which accounts are we going to credit? We have the purchases account, we have Regina and Bakuru. Goods we are purchased on credit. So which entries do we make in this case?
We are debiting the purchases account.
We debit the purchases account. Thank you so much. We debit the purchases account. So purchases account, let's all move to the purchases account. Let's all move to the purchases account. I believe you prepared the account already. Those on YouTube, they are saying the screen is not clear. Screen is not clear.
They have less weak network, maybe.
Let me try to adjust the brightness a bit. So let me try to adjust the brightness.
Marcia,
Yes, please.
I'm sorry.
Let me adjust the brightness. So members on YouTube, you can now confirm whether everything is clear. Please confirm. Okay, purchases, you said we debit the purchases account. Harriet, confirm. Purchases account. So in the purchases account, I write Regina. How much are the goods bought from Regina on credit? How much do we have, Regina?
We have 2,140,000.
2,140,000. That is Regina. Purchases, you debit the purchases account. Okay. Then which other on the same date? Still they purchased from
Bakuru.
Still they purchased from Bakuru. They still purchased from Bakuru. Goods worth how much?
1,520,000.
They're saying the screen is not clear. I don't know what's not clear because I'm sharing the screen and I expect them to see exactly what you people see. Anyway, I think Harriet, I think it's because of your network. I don't know, but I'll try to adjust the brightness of my laptop. Bakuru, how much is Bakuru?
1,520,000.
1,520,000. So we have debited the purchases account. Should also do the same. We have debited the purchases account. So I expect you to debit your purchases account. Then thereafter, we have to complete double entry. Don't forget that each and every transaction, it will affect two or more accounts. So what we have to do, we have to go to the Regina's account and the Bakuru's account.
we complete double entry. So Bakuru's account, what you do on 2nd September, 2012, Bakuru, what you do, you show that we have purchases from Bakuru. The purchases from Bakuru, we have 1,520,000. That is Bakuru. Then Regina, you will do the same. That is on 2nd, same date. Same date on 2nd. Still purchases. The purchases for Regina, we have Regina 2,140,000. That is Regina. That is Regina. So what's the next transaction? What's the next transaction? What's the next
On
transaction?
3rd,
September 3rd.
September 3rd. What happened on September 3rd?
Sold the goods on credit to Lakiri Shillings 4.640,000 and the Maido Shillings 4.120,000.
And Maido, let me take you back to the question. Look at that transaction together. Sold goods on credit to Lakiri Shillings that and Maido Shillings 4,120,000. So which accounts are you going to come up with in this case? Which accounts are you going to come up with?
Sales purchase.
We're going to come up with a sales account and the trade receivables account.
We are going to prepare the sales account because Kabatei sold goods. So you need a sales account. We need a sales account. And then since these goods are sold on credit to the customers, we need to come up with this customer's account. That is Lakiri and Maido. We need to come up with Lakiri's account, Maido's account, and then the sales account. So prepare those accounts very fast. There are 3 different accounts. Prepare them. And then after preparing them, we'll see what to do. Lakiri's account, Maido's account, and then the sales account. Prepare those 3 accounts. Prepare those 3 accounts. Prepare those 3 accounts. Prepare the 3 accounts. Prepare the 3 accounts. These are my accounts. These are the accounts which I have. Sales account is there. Maido account is there. And then Lakiri's account is also here. So I've prepared my accounts. My account, this is the sales. I have to show the details of the transaction, don't forget. Then I also have to show the amount, date, details, and then the amount. Those have to be clearly stated. Have to be very clear. So we have that's my sales account. That's my sales account. That's my sales account. That's my sales account. Then I also need Maido's account. These are trade receivables. These are trade receivables. These are trade receivables. These are trade receivables.
trade receivables, trade receivables accounts. The trade receivables, I need Mido's account. That's what I'm trying to come up with here. Mido's account. Then I also need Lakery's account. Lakery's account. Where those accounts is, there are 3 accounts: sales,
I know, right, Charlotte.
so these are the accounts which we have. This is okay. Mido sales account and then Lakery. Now, before you enter in the sales, don't forget that these are customers, and Kawata's been trading with these customers even in the last year, the past years. So we have to first enter the opening balances. We have to first enter the opening balances of Mido and the Kawate. These are receivables of the business, and we know that receivables are assets. They have a normal debit balance brought down. So the first thing you have to do is enter the opening balance for Mido and Lakery. That is on first. So how much? These are assets to the business, so they have a normal debit balance brought down. How much is Mido's balance, members? How much is Mido's balance?
3,600.
Mido is 3,600. 3,600. Then Lakery,
800.
Lakery's balance is 800. Debit balance. These are trade receivables. They are assets to the business, and assets have a normal debit balance brought forward. Now, what you can do, you can now enter the sales. Now, we already know that in the sales account, Mido's account, and Lakery's account. Now, which account are we going to debit? Which account are we going to credit? What are we debiting? What are we crediting? What are we debiting? And then what are we crediting? Emmanuel, the coordinator, what are we going to debit and then what are we going to credit in this case? When sales are made with credit? What are we debiting and what are we crediting? Pascal, what are we going to debit? Yes, we are debiting what? Members, how would we record the credit sales? Which accounts are debited and which accounts are credited?
Let me try.
Yes.
you credit the receivable accounts and then you debit the sales accounts.
You debit the sales account. Any other trial? Any other trial? When goods are sold on
We are
credit, which
going,
entries do we make?
we debit
debit
the,
the trade receivables, then we credit the sales account.
We debit the trade receivables and then credit the sales account. Okay. Trade receivables, these are assets of the business, don't forget. And when goods are sold on credit, when the goods are sold on credit, the trade receivables accounts, those are the customers' accounts. Those accounts have to be debited. Those accounts have to be debited, and then the sales account, that is an income account. The income account will increase with the credit entry. So the sales account is going to be credited, and then these customers' accounts will be debited to the amount of credit sales. That transaction is on which date?
3rd September.
That is on 3rd September 2012. We have sales to Maido. Those to Maido, how much are the sales to Maido? To Maido, they are how much? How much are the sales to Maido?
4,120,000.
For 120, that's Maido. That's Maido for 120. Then Luckily, how much were the sales made to Luckily? Luckily, the sales are how much?
For 640.
For 640. That is Luckily. That is Luckily for 640. Then, of course, you complete double entry. You complete double entry. You have to come and debit the customer's account, sales, Maido for 120. Then for 640. For 640. Sorry, that is in Luckille's account. Sorry. That would be Luckille's account. Luckille's account. I think I'm supposed to first enter the opening balances. There was the opening balance of 3,600. This was the balance brought forward in Maido. Then on the 3rd September 2012, Kabate made sales. Maido for 120. 120. Into Luckily, there was a balance of 800. Then sales for 640. For 640. Sales of 46. Sales of 640. That is Luckily. So that is the transaction on 3rd. We need to go back and then look at the next transaction, and then we see what to do. What's the next transaction? Next transaction, paid motor expenses in cash. 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 Which entries do we make if motor expenses we are paid in cash? Which entries do we make now in this case?
Motor expenses.
Cash account.
We need a cash account and then the motor expenses and then the motor expenses account.
We're going to
Alan, you
debit
mute.
the
Alan, you mute. Alan, you mute. So
we're going to debit motor expenses account. Then we credit the cash account.
we need a cash account and the motor expenses account. Those accounts are here. The motor expenses account and then the cash account. Please prepare them. Prepare them in your books. Prepare the motor expenses account and then the cash account, as I'm also trying to come up with my accounts here. So dates, details, and then amounts. So we are coming up with the cash accounts. Coming up with the cash accounts. This is my cash account. That is my cash account, as you can see. Then I also need to come up with a motor expenses account, which is also prepared down here. This is my motor expenses account. This is my motor expenses account. Expenses account. This is my motor expenses account. Expenses account. Now, what you have to do, of course, Kabati already has some cash. Kabati already has some cash in the till box. So first record the opening balance. First record the opening balance. That is on 1st September. That is on 1st September. Emma, how much is that opening balance? Cash in the till box. How much is that opening balance? Cash in the till box. How much cash do they have? Because you cannot pay for motor
900.
expenses without. That is 900. 900. So they already have some cash. So that's what they are using to pay for the motor expenses. Now, when you pay for the motor expenses, of course, the cash reduces because you're paying by cash. The payment was made on which date?
On 14th September.
On 14th September, good, 14th September 2012. Details are put motor expenses. How much?
260,000.
to 60,000. Okay. Then go to the motor expenses account. Of course, we have to complete double entry. That is on 14th September 2012. Every transaction is recorded twice in the books. Okay. So now motor expenses, put cash, then 260. So that is that transaction credit on 14th. When you pay for expenses and you're using cash, your cash account will be credited and then the expense account will be debited. That is cash and the motor expenses account. We move to the next transaction. We move to the next transaction. So what's the next transaction now?
Cash drawings,
Next
shillings 260.
cash drawings how much?
260.
Are you sure? Are the
No.
drawings 260?
Sorry, 320.
340,000.
Okay.
Drawings 340.
Okay, the cash drawings are 340. So which accounts do we need in that case?
We need the
Bank.
drawings account.
We need the drawings account and then the cash account as well. So prepare those accounts, the drawings account. Cash account, you already have it. You don't need to prepare another cash account. You'll use that very account for cash. It's already there. Then you also have to come up with the drawings account. So drawings account, what I'm trying to come up with. Drawings account. This is drawings accounts. So what do we do with the cash? Our cash reduces. What's the date?
15th.
Date is 15th. 15th, 16th.
It is on 15th.
Okay. Drawings. Drawings will be debited. The drawings account will include the debit entry according to the rules of double entry. How much are the drawings? 360?
340.
340.
Mm,
Drawings are 340. Then you go to the drawings account. That is on 15th. Debit entry. Sarah, you mute. Sarah, you mute. The drawings, that is 340. Drawings are 340. Then we move to the next transaction. We move to the next transaction. What's the next transaction now?
Goods return by Lakeri of 320 and Maido 360.
So goods returned
by Lakeri and Maido. So which accounts do we need in this case? Which accounts are you going to prepare?
Goods return account, Lakeri and Maido.
Goods return account. So customers are returning goods. So we enter those goods in what we call the return inwards account, or the non-goods returns account. It's return inwards account. Okay. It's return inwards. It's return inwards account. So we are going to prepare the return inwards account. We are preparing the return inwards account. The customer's account, you already have them. So let's prepare the return inwards account. Let's prepare the return inwards account. Let's prepare the return inwards account. My return inwards account. Return inwards account. Here. Prepare the return inwards account. Prepare the return inwards account. The account which we have here. Return inwards account. So which entries do we make? If customers return back goods, how would we record that transaction? Which entries do we make? Which account is debited and which account is credited? What happens to the customer's accounts? Do we debit them or we credit them?
Customer's account, we credit.
The customer's account is credited, then the return inwards account.
Debit the return inward accounts.
That's fantastic. On which date? Which date is that?
26.
26. So 26 September 24. Who are those customers who returned? Who are those customers who returned goods?
Lakeri and Maido.
So Lakeri returned goods worth how much? Lakeri?
320.
That is 320. Who else returned goods?
Lakeri.
Lakeri returned 320. Then who else returned?
Maido.
Maido also returned goods. Worth how much?
360.
360. But because of the double entry rule, that as we debit, there has to be a corresponding credit entry somewhere. So we have to go to the customer's accounts. And then we make credit entries in the customers. Who are those customers? That is Lakeri, and neither of those customers are here. The goods were returned on which date? 26. 26 September 2012. My details. Who is returning? We have Lakeri. Goods worth 320. Then on the same date, Maido also returned the goods.
Maido also returned the goods. Maido also returned the goods. That's Maido. Maido returned goods worth how much? 360. So that's how we report the return inwards in the customers. Sorry, I have to go to. Sorry. I think I'm entering in this in one account.
So you've entered Lakery's transaction in Maido's account.
Yes, let me try to correct that. Thank you. Level round these are returns. Those of 320 Lakery. Okay, 320. Remember, Sarah, you mute. These were sales, and this was a balance brought forward. The balance brought forward. The sales were on file. I'm doing some small editing here because I have to show the level of rounding of this account. So this date should come here. Okay, so that is Lakery and Maido have entered their returns in their respective accounts. So we need to see what next now. That was on 2016. Then what happened? Which other transaction do we have? What's the next transaction?
The 27.
What happened on 27?
Settled the
Settled.
amount of Bakula and Regina by check less than 5% cash discount.
Settle the accounts of Bakula and Regina by check less 5% cash discount. Settle the accounts of Regina and Bakula by check less 5% cash discount. So which accounts do we need in this case? Try to look at that transaction. Which accounts are going to come up with? Which accounts are you going to come up with?
The three accounts already there. Regina's account, Bakuru account, and the bank is already there.
Okay. Then which other account do we need apart from those?
The
Is there any other
settled
account?
accounts.
The cash discount account.
The what?
Cash discount account.
That is discount allowed.
Discount allowed. Now these are suppliers. You're paying them. You're paying Bakuru and Regina, but there is a discount. These are suppliers, so they offer a discount to you. So we call this a discount received. There is a reduction in the amount which Kabate is supposed to pay. So that reduction is what we call a discount received. So we call it a discount received. So it's not a cash account, it's not a cash discount account. It's not a discount allowed.
but it's going to be discount received because these are suppliers who are paying Kabate. So Kabate receives a discount from these suppliers. So you call that a discount received. Okay. So the discount, what's the percentage? That is 5%. Okay. So let's see how we can do this now. Let's see how we can do this. We have two transactions to go. They have said Kabate, they have said Bakuru and Regina. These are the accounts. You see them, Bakuru and Regina. So we have Kabate is paying these suppliers by check, but there is a discount of 5%. So let me start with Bakuru. Let me start with Bakuru. Now, in Bakuru's account, when you're paying your suppliers, of course, you will credit the bank account. You will credit the bank account. You will credit the bank account, and then you will debit the supplier's account. That is on which date?
27.
So on 27, Bakuru, we are about to end the month. This is on 27. Let's finish all these transactions. So on 27, bank. So there is bank. Still on the same date. There is a discount. A discount received, that is an income. So the discount received account will be credited. So the supplier's account will be debited with the amount of the discount. Now they have said that settle the accounts of Bakuru and Regina by check. Less 5% discount. We have to first of all find out how much is the account balance. When you look at the credit, you will see that when you look at the credit, how much the purchases in Bakuru's account, I think I'm making a slight mistake. So this is 1,500. So you first total up and see, because the credit side is bigger and the account has a balance of 2,720,000. Now that money has to be paid. That money has to be paid. The money has to be paid. So they have told us that Kabate is going to pay, but is paying by check with a discount of 5%. So I'll say equals to, let me first get a discount first. The discount is 5%. Times what Kabate is supposed to pay, that is 720. The discount is 136, meaning that Bakuru is paying, Kabate is paying Bakuru 2,720,000 less 136,000. That will be 2,720,000 minus the discount. So 2,584 is what Kabate has paid Bakuru, because there is a discount which is received. So Kabate is going to pay less by 136. So in fact, this account, we can close it because Bakuru's account has been clearly settled with zero balance. So that is the account of Bakuru. As you can see, there is a discount received. Of course, the check payment that was made, the account has been settled to zero balance. But of course, you have to complete double entry. Don't forget, you have to complete double entry. So go to the bank account on 27. Go to the bank account on 27. 20 below. This is Bakuru. was paid to 584. Who was paid to 584. So I've created the bank account. And then I have to complete double entry for the discount received. So we need a discount received account as well. So you need to prepare a discount received account. Here, my discount received account. Prepare the discount received account and complete double entry. Discount received account. That is an income account. So it increases with a debit with a credit entry. So we shall debit the discounts that have been received on the credit side of the account. The credit side of the account. So this is the discount received account. We have seen that 136,000 was a discount received from Bakuru. So we can credit that in the discount received account. That is your discount received account. That's the discount received account. Then which other account, which other supplier did they clear apart from Bakuru? Which other supplier was paid? Which other supplier was paid, neighbors?
Regina.
Apart from Bakuru?
Regina.
They also paid Regina. So for Regina's account is there on your screen. That is Regina's account. What is the account balance? The account balance is, there was a 4,000 balance broke down plus the 140. So the account balance is 6,140. 6,140. So, but of course, there was a discount. So on 27 September 2012, bank. 2012 bank. We have to find out how much was paid. Then there is also a discount. Discount received. Discount received is 5%. Kabate is paying the supplier less by 5%. So meaning that they paid 307. Sorry, the discount is 307. That's a reduction. So they paid how much? They paid 5,833. You first get the discount. Then after find out how much they paid. So Regina's account was also settled to zero balance. So this account, you can also close it off. They have paid Regina zero balance. Complete the double entry in the discount received account. Same date, 27. Below. This is Regina. Regina, how much? 307. 307. Okay, that is Regina. We have some few transactions. Let's finish them. Let's finish them, please. Let's finish them. We have a few. So I go to the next transaction. What happened next? Alan, are you still there? What happened?
Paid salaries by check.
By check how much? 1,120,000.
120, yeah.
Which accounts do we need?
Salary account.
Salaries account.
Bank account.
And then the bank account. Salaries account and then the bank account. Let's prepare those accounts. Bank account, we already have it. Which account are you going to debit and which account are you going to credit? Which one are we debiting and which one are we crediting?
We are debiting the bank, crediting the salary account.
No.
Debit the salaries.
Paid salaries. We
Okay.
we debit the salary.
When you pay for an expense, the expenses account will be debited. The expense account will be debited in this case, and then bank will be credited. Go and credit your bank. That's on which date?
28.
On 28th. On 28th September 2012. The salaries, how much are the salaries? They paid how much?
1,120,000.
1,120. 1,120. You need a salaries account. We need a salaries account. Salaries account. See already. Need a salaries account. We have complete double entry by debiting the salaries account. Need to complete double entry by debiting the salaries account. Need to complete double entry. Debiting the salaries account. Don't forget the details. The details will be bank. Details will be bank. The amounts are in shillings and thousands. That's our level of rounding off. This is bank. How much? 1,120,000. That is your salaries account. That is our salaries account. So what's the next transaction?
Lucky so settled her account in full by check.
Lucky settled her account in full by check. Lucky settled her account in full by check. Lucky settled her account in full by check. What do we do in that case?
Care will be debited.
Alicia,
Luckey's
what do you
accounts
do?
reduces, you credit,
Okay.
and then the bank increases.
And then the bank increases. So you debit the bank account, right?
Debit the bank account, yeah. Then you credit Luckey's account.
Okay. Let's do that.
The credit. This one.
So let's credit the customer's account. That is Luckey.
Yeah.
Where is Luckey's account? Luckey's account is here. So first go to that account. Luckey's account is here. When you look at the account, you'll see that there was an opening balance of 800. There's an opening balance of 800. There was a sale that was made on Credit Luckey of 4,640,000. But then, of course, Luckey returned back some goods. So meaning that when you get 800, what is 800 plus 4,640 minus 320? 800 plus 4,640 minus 320 because there was a return.
$51.20, 5,120,000.
Okay, so that's what was paid, 5,120. That is on which date? The details is bank. That is on which date?
29.
29.
That is on 29. You first find out the balance, then that will show the payment. The balance is 5,120,000. When you try to look at what is the debit, and then what is the credit. So with this account, you can also total it up because there will be no any balance. This customer has cleared her account, zero balance. Of course, you have to go to the bank account and complete double entry. Bank will now be debited. 29th September. This is Luckey. 5,120,000. 5,100,000, 5,120,000. That is transaction. Then we move. We have two more to go. On 29th, what happened? There is another question. On 29th, what happened? What happened on 29th? Members, are you still there?
The debt
Yes.
from Dodo proved recoverable and was written off.
The debt from Dodo proved recoverable and was written off. Which entry is with name? Which entry is with name in that case? The debt from Dodo proved irrecoverable and was written off.
I think it's a bad debt written
Bad.
The bad debt written off. So we need a bad debts account and then Dodo's account. Let's prepare those two accounts, bad debts and Dodo's account. Let's prepare the two accounts very fast. And then we end our session. Bad debts. Prepare the bad debts account. My bad debts account is here. And Dodo's account. This is my bad debts account.
account. I'm trying to prepare. So that transaction is on 29th. 29th September 2012. And the date is Dodo's date is to be written off. So in the details I'll put Dodo. How much? We need to find out the date. Check in the opening balances. How much was that date from Dodo?
300.
That date was 300. Good. So 300. Enter that. That was 300. Then go to Dodo's account. In fact, we have to first prepare Dodo's account. You can also prepare it. It's here. Dodo's account. Dodo is among the trade receivables of the business. So trade receivables have a debit balance broke down. These are current assets to the business. Current assets to business. And on 29th, when you first enter the opening balance in the account, because there was a balance that was on 1st September 2012. Balance broke down. That balance is 300. Will be down here. Balance broke forward. Balance brought forward. So 300. But now the data has been written off, so we have to credit the customer's account right off the date. That is on 29th September 2012. Bad dates. Bad dates. Don't forget to complete double entry. Every debit should be having a corresponding credit. So I've debited the bad debts account up here. Now I have complete double entry credit customer's account right off that date. Then finally we are on the last transaction. What happened lastly?
Bought another motor van paying by check shillings 10 million.
Bought another motor van paying by check 10 million. So what do we do in that case? What can we do? What can we do? Which accounts do we need?
Bank account and the motor van account.
Bank account and then the motor van's account. Bank account and then the motor van's account. So which one are we going to debit and which one are we going to credit? Yes.
We debit motor van and
The credit with what? So the bank account is going to be credited because Kawate is buying a motor van and is paying by check. That is on 30th September. So the bank account reduces because you're buying the van by credit. So you're buying the van by check, you're paying through the bank. So we have to credit the bank account. That's how much?
10M.
That is 10 millions. Prepare the motor vans account. My motor vans account is here. Post motor van, there was an opening balance. Check that opening balance. How much is the opening balance?
9,000.
That is 9,000. Sarah is mute. The balance brought forward. There is a balance brought forward of how much? Of you said 9,000?
Yes.
9,000. There is a balance brought forward of 9,000. And then on which date? On 30th, they acquired another motor van by bank, paid by check. Paid by check. How much?
10 million.
That is 10. That is 10 millions. That is 10 millions. So those are the transactions. Those are the transactions according to the information we have in the question. We have been required to post the above transactions in the respective ledger, in the respective ledger accounts. Now Roman 2 is to extract a trial balance. Roman 2 is to extract a trial balance, but we cannot do that because of time. We shall start from there next Friday. We balance off these accounts one by one. Then we also see how we can prepare a trial balance. We see how we can prepare a trial balance. More tutorials have been shared on YouTube about preparing the 3-column cash book, 2-column cash book. Please use them. Bank reconciliation, I'm going to share the questions, which you can use in addition with the material on YouTube. Because now this is already October, we're already in mid-October. Next month, that is November, December, and of course you'll be doing the exams in January. So you have to do your best, you have to put in more effort, you have to practice, don't forget. In case where you're stuck, you can ask in the group or you can text me, then you will see how we can move. So after next week, we shall look at how we can balance these, how we can balance the accounts, and then we shall also look at how we can extract a trial, how we can extract a trial balance, and then